Alrighty, I think we are live. Perfect, very good. I hope you guys can see me well. You can hear me. My face is not too shaky, and sound is okay because right there on the street there is a road. I think, by the way, I'm a little bit shaky. I might turn off the camera. It is because of the Wi-Fi right now. Yeah, I think it is. Yeah, okay, I'm gonna turn off the cam, guys, because this is quite horrible if you constantly see my face shaking all over your screen. We are going to look at the markets for what has happened the last week and what we can expect till the end of the year. There's a lot going on, so let's dive straight in and go through it as fast as possible, and then we can start off the weekend. So I didn't want to upload a video today. I want to do a like Friday, more a bit of a chill session, where, like I said, we look at the markets, the news, price action, and what does it mean for regular people, you and me, about all the stuff that's going on in the world, because never a dull day wherever you look, you know, there's always a story to find, there's always something to do. So, alright, I am now really going to turn off the camera, because then we can dive in. So I think you guys now see the entire screen. Let's first start off a little bit with the news, and then we are going straight to some of the charts where I want to show you guys something. Let's first start off. Bitcoin has had a hard time, but if I see these kinds of headlines, then I think that the bottom sometimes may be in, and there's also still a lot of stuff going on for Corona. And then we have the Bank of England that is busy with all kinds of stuff. Let's get right to it. First of all, I think that's the most important news, and something that has been almost too obvious, is that the Federal Reserve came out this week that they will aggressively dial back on its bond buying and seeing 3 rate hikes for next year. What they mean is that they take liquidity out of the market, and they might raise interest rates. Usually that goes with 0.25% per time to fight the high inflation. And that tapering that will be done by 30 billion, sorry, would it be 30 billion a month, and before that was 15 billion. So that's quite a lot. That was on December 15th. Then on December 16th, what a coincidence, not, European Central Bank also said that they will cut the bond buying, of course, also to fight the high inflation. They did not say we will right away raise the interest rates, but they don't see signals for that yet. But of course, what's not there yet is maybe still to come. They just want to keep some ammo or ammunition in the future in case that's necessary. And then also on Thursday, 2nd of December, so everything within 48 hours, the Bank of England says that they will a rate hike will be coming anytime soon. People, this is not a coincidence. If the central banks of the Western world all decide within 48 hours to raise interest rates, or at least to fight the inflation, however they're going to do it. Because you'll see here, UK inflation is somewhere around 5%, and they might even think that the inflation will spike up to 6% in April, and I think in the rest of Europe it's also around 6%, so that's quite high. What does that mean for the markets? Is there finally a turnaround? Well, for now, so far, it doesn't seem like there's a lot going to change in the immediate short term, but it might be on the long term. Because if you look at the charts, and let's first take the S&P 500, it looks absolutely a little bit ridiculous. I draw this chart some time ago, and you see that the S&P 500 is just in a channel all the way from your left left bottom of the screen all the way to the right top, and every dip is now just for buying, because the Feds are, the central banks, wherever that is, are just printing so much money, and All they want to do is whatever it takes, no more economic crisis. That leads to buying up whatever there is. So although it might have felt like that the last few days, and we're now looking at the daily chart, we're going a bit sideways or going a bit down. That is for the last month. In the overall picture, I don't see a problem yet. We have seen a tremendous upside since this year. So this is 2020, and we're still up 25%, which is more than 3 times the average. The average stock market rises over the last 100 years is usually between 7 and 8%. And the year also before 2020 the same. That will mean that sooner or later the markets need to correct once or need to slow down once, because in the last 100 years the average growth was 7 to 8% a year. So if you have years where you have 10, 15, 20% growth, so really high 15 to 20% growth, then you also need to have a few bad years or a few years where barely in a growth to respect that average. Now, an average is an average, so it can always change, but we have seen this in the past, and in the past I mean in the 70s and 80s, where we also had years where certain stock markets rose up 10, 20, 30% a year, and then 1, 2, 3 years in a row, and then suddenly 1 or 2 years going completely flat or a slight loss. So I would not be surprised if that would somewhere in this decade will happen. When? It's anyone's guess. So far right now, if you zoom in on any of the charts in the last 2 years, it was just an elevator up, shall we say. This is the S&P 500, 500 most biggest companies in the United States. If we're looking at the Dow Jones, it's exactly the same. I think I once used this chart some time ago. This one is maybe a little bit difficult to read, because you could say the bottom line says that we're still intact, but you could also say the top line, we have kind of tested the support here, tested it here, we broke down, we are retesting it and now going down. Could be, that doesn't mean that tomorrow all the markets are on fire, we're going down and we're going down drain and this was it. Absolutely not, but it is interesting to see. So yeah, don't take this as a leading indicator. Then the Nasdaq, same kind of story. I mean, of almost every big index in the world, you can just put this line here where you see this constant support, and to be honest, I don't see it being broken anytime yet. Again, it will happen at some point, but because of the power of the central banks, that will not happen yet. This is the FTSE 100, so that's the stock exchange in London, same kind of story. We're looking broader, this is Paris, the Kakkerrand, same kind of story. If we are going to Germany, the DAX, also same kind of story. Immediate charts, like the bottom line is everywhere the same, only the tops here and there are a little bit different, right? And then if we're looking at oil, that is also a bit of an interesting story. I mean, we have seen this supply shortage all over the world now for the last few weeks and months, and prices are just going through the roof. Well, also of course has to do with the high inflation, but it seems like there's just like a complete supply chain shortage of everything. I'm sorry if you hear a dog in the back barking, that's somewhere in the street. I cannot turn it off. It is just, the shortage has been seen everywhere. It's not only oil, but it's also plastic, wood, chips, aluminum, lithium for batteries for electric cars. It's been pretty much everything. And when there is a shortage, then the price can only go up. So we have seen the oil price rallying up over a period of 18 months. From $20 a barrel now to 70, even up to 80. It's taking a breather right now. I would not be surprised if this again goes to 80, 90, or even $100 in the next few weeks or months. So the oil price is also kind of the example of what else is happening in all kinds of supply chains, right? And of course, the prices of certain assets or certain commodities will spike up more than others. For example, natural gas in Europe is going completely through the roof. A lot of households really have problems there right now because the gas price is just so high, and they are right now in winter, and it will still take another few months before the spring comes in. That's usually April, May, and then the gas price, what they use to heat up the house, or at least the gas that they use to heat up the house is then not so much anymore. So for them it doesn't look all too good. With the central banks and the printing of the money, you of course have now higher inflation. That is what they're trying to fight. Usually gold is used as a hedge against inflation, against uncertainty. So you would assume actually in a period like that gold will completely skyrocket in that period. And since we now know in the last few weeks that the inflation is just going higher and higher, gold is seen, like I said, as a hedge, as a safe haven, as something to preserve your capital. But we haven't seen that in the price. Matter of fact, if we look at what the price was in January and where we are right now, then we are in a loss for this year. So that is quite incredible, 4.5%. How come and how is this possible? Well, there are a few scenarios here. If you would zoom out, this is on the daily chart. You know what, let's even take the weekly. You could say that gold has these very long sideways periods, kind of consolidation periods, where we go through. Well, this was one a little bit. This one was one a little bit. And then maybe you could say that this is then right now one. And then afterwards the price goes up again, right? And that just takes then a long time to consolidate, in this case weeks. Some assets just move faster than other assets in the market. So the commodity market in this case is quite slow compared to stocks, and is tremendously slow compared to crypto. So bull runs in commodity markets, let's say gold, can sometimes take 7 to 10 years. Also, the bull market in uranium was 7 to 10 years the last time. So that is tremendously long, and then you have those also big wicks down. Another scenario is that central banks, investment firms, just regular big banks are holding so much gold that they can manipulate the market, and they are just selling off their gold or putting in a lot of short positions. Reason therefore is that they say if gold reaches certain price levels, then that will be picked up as in the market as mayhem, the end, we need to get out of cash and into hard assets. And then they're afraid that the gold price will maybe double or triple, and it will spill over into the real economy, and people really fleeing to the bank to get the money out and putting it into gold or real estate or whatever, something that the government can print. So that is another one. I think it's a bit of both. There's proof, there are examples that big parties are suppressing the gold market and therefore manipulating a little bit the gold market. Hey, let's be honest, the same happens with oil. I mean, you have OPEC, a bigger cartel doesn't exist, and they determine the price for the entire world. So there are just parties who influence certain price structures, absolutely. Let's quickly dive into crypto. This morning on the trading channel, I have uploaded a video where we go more into detail. Let's now just kind of hover around and take it on a very macro look. This is also on a daily chart. We have seen long periods where we kind of, make a big top and then we go down, and we're making another top again and go down, and big top and go down. I think that the correction soon is as soon as in the next week or two, and then we will be going up again. On the big scheme of things, this is still kind of a bull market. We are still trending higher over a longer period of time. So that so far looks good. Please don't mind all the lines and the support and resistance and everything. Again, that's what we use for the other channel, but I thought let's be easy to use the same graph. On the long term, in my opinion, this is the most scarce asset in the world ever created or ever found. And therefore the price can only go up. So I am long term super bullish on Bitcoin. And on the short term, like I said, I think we will be bottoming out and soon go higher. Another one, this is actually parallel on the gold price, is that some people say, yeah, why doesn't gold price go up? Yeah, it's because Bitcoin is stealing gold's thunder. Bitcoin is seen now as the digital safe haven, as the digital gold, and the money that would be put into gold is now going into Bitcoin. There is maybe a case to be made, but it's very hard to really calculate this, to really track this down. Then you really need to call up, I don't know how many hundreds of thousands of gold investors saying, hey, how much of your gold have you sold and located right now in Bitcoin? That's very hard to do. So sometimes also just a story of the media has been taken over and then just being repeated 100 times, so suddenly it becomes the truth. And also gold is going sideways and Bitcoin is now going down for the last few weeks. So yeah, I think then the case is invalid. Let's quickly go to Ethereum. Same kind of price, also same kind of story. I'm also super bullish on the long term, on multiple years and weeks to come. And if you see these charts on a weekly, very long term, you see that the price is just slowly grinding higher and higher. And of course, you have those periods where we are correcting, where we are going down, and then we're going up again, correcting, going down. So that's just how it goes, people, in a market. Nothing goes up in a straight line and nothing comes down all at once. So be patient and just go with the flow. And like I already said a few times in other videos, money is a living thing. It goes there where it can find a return. It has a character. It can be used in your advantage or in your disadvantage. So educate yourself and use it wisely. Other thing that's going on right now in the markets, and it's actually a great example of that inflation is real and inflation can happen to all of us if we don't watch out, is Turkey. So in Turkey they had they're having a huge inflation right now. The Turkish lira is going completely down the drain. Turkey is sometimes being seen a little bit as the bridge between the West and the Middle East, and they would almost enter the European Union, but then they didn't because Erdogan did all kinds of crazy stuff. Well, anyways, the news chapter right now is in the last few weeks, the Turkish lira is just going completely down the drain. No one wants to have it anymore. It's being dumped on the market. Every new central banker in Turkey is also gone within no time. So Erdogan is firing his financial staff faster than all the Tinder dates that I have. It is going, it's absolutely crazy. And this should be a lesson that this happens at the front door and that the West should try to do whatever they can to not get super high inflation or not let the currency go down the drain, because then you have a very bad export position. To give you an example, this is the Turkish lira versus the euro. This looks like the chart is going up, so it looks good. No, this is against the euro. So that means in around 2020, you can have for 1 euro 5 to 6 lira. Then it was already getting a little bit worse in the country, and suddenly in 2021, you can have around 10 lira for 1 euro. So if you want to go on a holiday, it's kind of cheap. And then now lately we're going absolutely parabolic. And so if you would now hand in 1 euro, you get around 18 to 19 lira. The Turkish people are quite in despair, so we say. They don't know what to do anymore, so they're now accepting usually dollars and euros, because then they can convert it right away to lira, and if they will be paid in lira tomorrow, it's worth less. So they're just very afraid of what's going to happen, and that will maybe go to kind of a Zimbabwe scenario. What the answer is, probably destroy most of the capital in circulation and rise interest rates, but then you would go almost directly into a economic downfall, because then the cost of money is going up, and then you will go into a crisis. So it is super hard to control these kinds of situations. Sometimes they'll say, you know what, we are going to start over again. We're going to give a new kind of bill maybe the Turkish lira 2.0 and one Turkish lira is now $1 and then they're going to start all over again. Could be, but we'll see what happens. All of that kind of summed up is what Ray Dalio, the most richest hedge fund manager in the world, says. It says the Fed's hands are tight and higher US inflation is sticking around. Democracy, maybe not. Well, what he's trying to say, or what he's saying right here is once the central bank started printing money, there was actually no way of return, right? So you are printing a lot of money, there's much more liquidity, there are lowering interest rates, and then at some point, sooner or later, you will get higher inflation. But to fight the inflation, you can take money out of the market, so kind of destroying what the central banks are doing, and rising interest rates. But if you do that, then the borrowing money becomes much more expensive, and therefore for a lot of businesses that can now kind of almost survive, because the cheap money will then absolutely go bankrupt, the people will get fired, and there you have your economic crisis. So yeah, the central banks, and doesn't mean if now the Fed or the other big central banks, if they are going to rise interest rates to fight inflation, that will cause an economic crisis. If they don't, then high inflation will take over and your money becomes worth less and less and less, and that is absolute destruction of the Western capitalism. Trust me, if you have hyperinflation, then everything that you have worked for the last few decades is gone, it's over, because what is then something worth? You know, is then suddenly a bread $1 or $1 2.0 as we're gonna call it maybe, or do we need to